Hello everyone and welcome back to the Velocity channel, where this is your bridge to financial freedom. Today we're going to be answering a very good question by our subscriber, Miss Ling Ling, and thank you so much for that, Miss Ling Ling. We appreciate that. The question goes like this: CJ, what if you don't have a line of credit but you have multiple credit cards? Okay, how is this method of chunking principle, how is that going to work when I only have credit cards? You know, I got to worry about advance fees. I got to worry about this fee, that fee. Well, today we're going to answer that definitively in this video. But before we get into that, please like, share, and subscribe so that you can have more videos like this and get help, and share this all around the world so that they can get help from the Velocity Banking Method. Are you ready? Man, I sure am. So first of all, the question was multiple credit cards. Is that going to be a problem? No, it's not. All right. Now, even if you have a one credit card with a multiple limits on there, I'm talking about higher limits, that's not going to be a problem either. And I know what you're thinking. You're thinking, well, CJ, but what about the advance cash fee? Well, the cash fees, the advance fees for that, it could be around 30%, or it could be as low as 5%. But let's go ahead and take an average of all of it, and let's go ahead and say, what if the cash advance fee is 25%? Would it still be worth it to do the Velocity Banking Method when, for instance, you have a balance of $10,000, but that fee is 25%? The cost to do that is $12,500. CJ, is it still worth it? Well, let me let you answer that. In this example, we have a mortgage, but this can work on any loan, okay? Because remember, many loans are amortized, all right? What does that mean? It means you go by a schedule, and the money that you give them each month gets allocated to either the principal or the interest, the principal and the interest, okay? There's a certain amount that goes into each. Now, on the mortgage, it's front-end loaded, meaning you're going to be paying more towards the interest than you are towards the principal. That's why it's taken a long time to get this loan paid off, right? So let's go ahead and say that you went ahead and did that cash advance fee. Your total cost is $12,500, but you are putting $10,000 towards a $200,000 home loan. Now, why would you want to do that? Watch this. Because when you do that, $200,000 minus $10,000 is what? $190,000, right? Okay, now, what is that 6%, which is the interest? What is that attacking? That's attacking the $190,000. It's feeding off the $190,000. It's not feeding off of the $200,000. Now, why would you care about that? Well, because that $10,000 actually just skipped you ahead 3 years and saved you $33,000 in interest. Let that sink in, please. It saved you $33,000 plus in interest. Now, I know what you're saying. CJ, how did you do that calculation? Please, please, please refer to the schedule. Refer to the amortization schedule, which the lenders will freely, right, give out, especially if you're doing the mortgage, all right? And you can even look this up online on the internet. What it does, this chunking principle, it'll actually skip you ahead 3 years. I got to say it again. I know it's unbelievable. You fast forward, okay, 3 years into the future. That's why you're able to pay off that loan in no time, very rapidly, because of the chunking principle. Now, keep in mind, you're going to be paying each month as well, okay, so that you can end up saving the $33,000 and skipping ahead 3 years. Now, let's look at this. Okay, now that's if you got the cash advance fee. If you want to do a plastique, each of those transactions, it's 2.5% a transaction. So let's go ahead and do that math as well. 10K, okay, multiplied by 0.025, which is 2.5%. That's going to equal $250. So the cost there is $10,250. Is $10,250 less than $33,000? Okay. Now, my question is $12,500 is that less than the $33,000? Which one do you want to do? Okay. Now it did cost you, but if you don't do this, how much is it going to cost you? Oh man, that's good. Now look, I am not arguing with you. It does cost, okay? It costs you $2,500 on top of the balance, all right? If you're doing the cash advance, okay? So for a total of $12,500, okay? But it's also going to cost you if you don't do it. So the decision is definitely up to you. Whether you want to do plastique, right, which is $10,250, right, total cost, or you want to do the cash advance, isn't it still better, still in the form of a question, no judgment here, isn't it still better to do that instead of this? You see, the mindset of many people is, oh, what is it going to cost me now? And you're not including what it's going to cost you then. It's okay to look at something, right, on the surface, as long as you know what's behind it. Do you have the full story? And what we do here on the Velocity channel is we give you the full story. The bankers are making money off of you because they know that you are only going to look at this number here. What's it going to cost right now? And they are relying on you never implementing that awesome strategy, right, of Velocity banking method, because they want this one, okay? You know, with every mortgage, a lender, you pay for the lender's mortgage, okay? All we're trying to do is get you to see that even if it costs $2,500 more, you would still be making $33,000 out of the $12,500 that you spent. Now, I dare you to give me an investment that's greater than that. You can't. With $10,000, with $12,500, you just made $33,000. We got to start thinking like this, especially when we see those 14 banks about to fail. I know that's a question, and that may be a video for another day. It may not be, okay? But 14 banks are about to fail. Maybe in December, maybe in January, but 14 banks. The notices were already sent out. The signs are already coming. So what am I trying to get you to do? I'm trying to get you to make sure that you make connections, right? In here and then out here, to people who actually know about how this stuff works, how finances work, all right? That's why we're making connections with people like Benjamin Summers up on the mastermind, making sure that we're connected correctly, because when the apocalypse happens, okay, possibly, we'll make sure that we are the lenders and not the borrowers, okay? And that's what that's all about, folks. Just making sure that your mindset is changed. Are you looking at this alone, Miss Ling Ling? The cost. Okay, don't worry about the multiple credit cards. You got to be concerned about this. Okay, the interest that they are gaining off of you is greater than what you are going to spend, but you got to spend it. You got to invest it in the right way. Do you want to spend the $12,500 to make $33,000, or do you just want to pay the $33,000 and get nothing out of it? That is up to you to decide. Thank you so much for watching. God bless. If you got another question, go ahead and let me answer it. You take care. Share this all around the world. Become a subscriber so that I can answer your questions as well. You take care.